In this video, we're going to go through some of the frequently asked questions when it comes to trust planning. Now, these questions often come up when people have received their draft document. So this is really focused at people who have received their draft trust pack. If you have received your draft trust pack, I would mention there is another video that guides you through the contents of that pack and how to handle the paperwork inside. So that's well worth a watch as well, if you'd like some guidance on how to process and return the trust draft pack. But for the moment, we're focusing on frequently asked questions, and the purpose of the session really is to discuss some of those frequently asked questions, of course provide some clarity and some answers around them, which hopefully will give you a bit more confidence as you're looking through your draft trust documents. So question number one, we often get asked about the step standard provisions. What are they? What do they mean? Should I include them? And the answer in almost every case is that we should include all of the step standard and special provisions. Now, I haven't got time, of course, to go through every single one in this session. So if you do have a particular question on one of the clauses, then please do get in touch, and one of the people in the office will be glad to discuss that with you. But in general, we should include all of the step standard and special provisions. They exist, A, to simplify things and make life easier for your executors and trustees. And they're also there to protect the executors and trustees from liability in the event that they make a sort of genuine mistake. In the event they commit any sort of fraud or malpractice, then of course they will be held liable. But we're trying to protect the executors from sort of genuine errors and omissions here. In addition, the special provisions give the trustees ability to borrow money, to delegate some of their functions. So again, they're designed to make life easier and more straightforward for the trustees. So in almost every single case, we think they should be included within the will. Question number two, again, this comes up very frequently around the life interest provision in the trust. So a life interest is where we're giving an interest in assets, normally to the surviving spouse, but then there's a predetermined future beneficiary when the surviving spouse dies, and that would often be the children who would be the future beneficiary. But the question we get very frequently, and people get a bit scared about this, can the surviving spouse take the capital as well as the income? So I'm going to give us some examples here, some example will clauses, and I think this is the reason why people often get scared. So the clause numbers might be different on your will depending on the types of clauses and the construction of the will, but the wording will generally be the same. So the first paragraph here, the larger paragraph, just creates the life interest trust. And it's clause 5.1 in this example that people get worried about. My trustees shall hold the trust fund on trust to pay its income to my wife during my wife's lifetime. And if you take that clause in isolation, it does appear that it's just the income of the fund that can be paid to the surviving spouse. Now, of course, if this were the wife's will, you would replace the word wife with husband or civil partner potentially. So it works both ways, but in this case, we're talking about the wife. So it's actually clause 5.2, which is normally the following clause, which saves us. So in this particular clause, the trustees have permission, as it says here, to pay or apply the whole or any part of the trust fund for my wife's advancement or otherwise for my wife's benefit. And this means that if required, the trustees do have the power to appoint the capital of the trust fund. So that really protects the surviving spouse and gives full flexibility for the trustees to appoint capital if needed. Now, of course, our preference in almost every single case will be that the trustees grant an interest-free loan to the surviving spouse so that the money can be repaid when they pass away. And it's that loan mechanism that gives us protection against inheritance tax and against things like divorces and bankruptcies, which might impact on family wealth later on. So the wife can have access to the capital in most cases, unless that's been explicitly excluded, but most people would want to give their surviving spouse, their husband or wife, civil partner, the ability to access capital if required. Now, this is, again, a very common one, the Chattels Clause. So basically, just what on earth does this mean? So in most wills, it's clause number 2, and we have this huge paragraph with, quite intentionally, no punctuation. So it's a bit of a mouthful and it's quite difficult to get to grips with, and very often people will ask us what the meaning of this clause is. Now, in very simple terms, this is just giving the executors of the will the power to either give away or dispose of your chattels, so these are any items that you have in the house or elsewhere, to anybody who's a beneficiary under the will. However, that the bottom half of the paragraph says that if you've given any wishes, or if you've dictated anything, if you've left notes on items, then those wishes should be respected. And in most cases, alongside the will, we'll prepare a wishes letter which will detail any specific chattels that you'd like to give to specific people. But otherwise, this clause takes effect and it gives the executors and trustees the power to distribute assets or chattels in line with your wishes. Now, very commonly people will make this request or ask this question, if I set up trusts, does it mean we pay inheritance tax on the first death? Now, the answer in almost every single case is no. Now, there's very rare exceptions to that rule, but in almost every single case, because we're doing a life interest for the surviving spouse, that falls under the spousal exemption. So there's no inheritance tax due on the first death, and that's normally covered by the spousal exemption. But do double check if you're concerned in your particular case. Question number 5 is around the different types of trusts and specifically what each of them are for. So why do we have different types of trust and what are they for? So I find it useful to categorise trusts in sort of 3 different boxes. So the first type of trust is for assets that are not normally included within your inheritance tax estate. And as a broad definition, that would include pensions, life assurance, or death in service benefits. And for those assets, we use the Asset Preservation Trust, or APT for short. We then have everything that's left in your residual estate. So this is everything left when you die. So it could be property, cash, investments, pictures, gold, wine, anything that you own when you die is included within your residual estate. Now, some people get a little bit tied up and they try to define what that's going to mean ahead of time. But that's really not necessary, because when you die, all of your assets will be gathered together, and that's known as your residual estate. And for the residual estate, we use the beneficiary protection framework, which incorporates the beneficiary protection trusts for each of the beneficiaries. Finally, we have a trust for lifetime gifting. So this is anything you want to give away during your lifetime. So this doesn't impact anything that you do on death. This is only for gifts given during lifetime. Now here we use what we call a protective gifting trust, or PGT for short. And this could include anything. It could be property you want to give away. It could be some cash, some shares, or other investments. So you can choose to give anything you like during your lifetime, and that's where we use a protective gifting trust. Number 6, around trustee decisions. So very often, again, people will ask, do trustees have to agree unanimously on everything? The simple answer really is yes. So trustee decisions in almost every case must be unanimous. There's no voting system, there's no 3 out of 4 or 2 out of 3. Trustee decisions should be unanimous. And of course, at this point, people will then ask us, well, how about if they don't agree, what happens then? So this is the reason why in a lot of cases we'll actually have a separate trust for each beneficiary, so that each person has their own kind of pot of money to reduce the possibility for any arguments or disagreements. It's also another reason why it's very important to give careful consideration when you're appointing your trustees. You need to decide who the people are going to be, and of course make sure that they're likely to get along and to agree on most things. It's not a good idea if there's 2 siblings that are at each other's throat the whole time. Probably not a good idea to appoint them as trustees simultaneously. And following the theme of trustees, can we change trustees or beneficiaries later on? Now, the simple answer here is yes. Now, most things in the trust framework can be adjusted or amended later on. So we have the ability to change trustees, we can add or remove beneficiaries, we can change who's going to get what out of the will. So all of those things can be changed fairly easily and also fairly cost effectively if things change or circumstances change in the future. So that's very straightforward. What happens at the end of the 125-year trust period? So we've mentioned this probably as you've been through seminars and through our meetings. The legal maximum life of a trust in the UK is 125 years. Now, at the end of the 125 years, normally the trustees will simply distribute the remaining assets to the surviving beneficiaries at that point in time. So it could be your children, could be your great-grandchildren, could be your great-great-grandchildren. But whoever those surviving beneficiaries are, the money can simply be distributed outright at the end of the 125-year period. And then the final question we're going to address in detail here is around property gifting. And specifically with buy-to-let properties, a lot of people ask if they can gift a property into trust if it still has a mortgage on it. Now, legally speaking, the answer is yes, that there's nothing preventing legally the property being gifted into the trust with the mortgage intact. However, most mortgage lenders are going to be the challenge here. A lot of mortgage lenders simply won't agree lending if there's a trust sort of going to own the property. They won't agree the lending at all. And the reason for that is that the trust limits the liability. So if you have a mortgage in your own name, not only could the lender seize the property to recoup their borrowing, but they could also look to seize other assets that you own. They could come after your main house, your cash, your investments. Whereas if we put the property into trust, the trust is a legal entity in itself. So then they will just have the property. So it represents a higher risk for the lender. Now, there are some lenders that will lend to a property that's in trust, but generally speaking, they'll do so at a slightly higher interest rate than normal. So if at all possible, it's better to gift an unencumbered property into trust. And in many cases, we'll actually remortgage one or two properties to pay off the mortgage on another one. So we've got a mortgage-free property available to gift into trust. And then finally, I'm going to cover this in a separate video. So a lot of people ask about the residence nil rate band provisions in the will. Now, they are very complicated, and unfortunately that's simply a necessity based on the legislation that we have to deal with. So there's going to be a separate video. Again, if you'd like to see that, please ask for the link. But we're going to do a whole video on the residence nil rate band provisions and covering what they mean and how they operate within the will. So please be sure to check that video as well. That's it for the frequently asked questions video. If there's anything else you need help with, please do not hesitate to contact a member of the Buckingham Gate team. We'd be delighted to help.